So you want to get funded in 2024 but don't know how? In this video, I'm going to be showing you the exact blueprint that I would use to get multiple different funded accounts, including the trading plan, the risk management strategy on the funded and live stages, and also how to scale the business model. So if any of this sounds interesting to you, make sure to stick around until the end of this video. Make sure to like and subscribe for more content like this, and let's get straight into the plan. Okay guys, so as I mentioned, this is going to be how you can get funded in 2024. We're going to be going through the strategy, risk management, comparing the prop firms and which ones I think you should choose, and also when to scale the business model and basically reach an uncapped earning potential from prop firms. So step one is obviously to have a dialed in strategy that you are very, very comfortable with and have a track record of, I would say, at least 6 months where you have proven to yourself that you can follow that strategy and it performs well in the live market. So if you don't have one of these, I'm going to be giving you guys a free trading plan in a moment, and I'm going to be showing you an example of a trade that I would take using that strategy. But if you don't have one and you don't want to use that, I would simply go about this by, first of all, back testing and collecting data on a technical strategy. You know, there's plenty of good free ones on YouTube, or you can simply create your own one, just as long as you can back test it and the data suggests that you have an edge. After you have back tested the data, this is when we go over and forward test the strategy, risking 1% of a small live account, say £500 if you're from Western countries. If you're not, and that is a lot of money to you, I wouldn't recommend live trading with anything less than that, because you won't be able to risk 1% of the account due to the lot sizes. But if you don't have that, start a demo account and make it as realistic as possible by only risking 1% of that account and collecting data on that strategy over a period of 6 months. If you have got to the point where you can average at least 1 or 2% per month, or maybe even more if you have previous experience trading or the strategy is working very well for you, then this is when I would go for a prop firm challenge, but not any time before that, because you don't want to just be buying the prop firm challenges, testing a strategy on the prop firm challenges and not really knowing what you're doing, and ultimately just blowing that account, which happens with a lot of people. You can simply beat most of the traders, I would say 90%, by having a strategy, having a clear set of rules, as well as risk management plan, and then it's simply about following that strategy on the prop firm account, and then you can ultimately beat 90% of the traders that lose. So the next stage, actually before we go on to the next stage, I want to show you guys the free trading plan that I mentioned. So this is the trading plan that I currently use and have currently been implementing for over 2 years now. So the strategy itself is very, very simple, and we're going to be going through a live example just to clarify what I mean by some of these points. So the first point that I always do when I am looking for a trade is to identify overall market structure and direction on the 4 hour and the daily, and then I'll also break it down to the 1 hour time frame to see the current order flow of the market. So if we go through an example real quick, there was a beautiful example on gold this week actually. So if we go through gold, and we'll take it back here. So as per the first stage of the trading plan, we identify market structure and direction. This week I was looking at this trend here, which obviously was bearish. We've had a 4 hour break of structure just here, which means that the current range I'm looking at for sell positions is between this low and this high. If price breaks this high, you know that's a break of structure to the upside and price is likely to continue bullish, perhaps to this previous high. However, since price had just come into this empty imbalance down here, where we won't expect much resistance, since there's no liquidity resting within this zone, it's just like a gap in the market. we were expecting price to continue lower after a pullback higher. So that is when I simply started to wait for a pullback. And that is basically all I do in the first stage, just to identify market structure and direction. In this case, it was very simple. We just had a break of structure to the downside in this overall macro trend, and we were waiting for a pullback into some sort of area to continue selling. Which brings us to stage 2, which is to identify a point of interest. And for this, I've categorized 2 different types. The first one is an imbalanced area of supply or demand. We need to see liquidity below that zone, and we need to be following the order flow as well, meaning that, say in this example, we're clearly bearish. We don't want to be looking for areas of interest above this high, because obviously then price would be bullish and we'd be selling counter trend. So what we simply want to do is look for an area of interest between this high and this low, aligning ourselves with that current hourly trend and structure. As I mentioned, we need to identify an imbalanced level of supply, and we need to see some liquidity taken out below that zone. So this week, what stood out to me was this area of supply here, which was just above this area of liquidity where people were previously selling. It was also left unmitigated. As you can see, we had imbalance in here. We also had this one up here as well. However, for the purpose of this video, we'll just concentrate on this one, as this is the one that ended up being respected. So I identified this level at the beginning of the week, and then leading up to this level, I was simply waiting for price to come into the zone. I wasn't looking to buy up to the level, as price was bearish, and when we are taking these prop firm challenges, we want to simply be waiting for the highest quality positions, maybe 1 or 2 per week, and we want to just be staying patient and only taking those A+ setups. So I knew that an A+ setup in this case would only be with the trend, so selling with this overall hourly trend and structure. So once we've done that, we go down for the lower time frame entry model. And for this, as simply as possible, we want to see if it's an hourly or 4-hour point of interest. We then go down to the 15-minute time frame, and we want to see price break structure. We want to see an imbalanced level of supply created, and we also want to see some liquidity below that level. So if we just fast forward price here a little bit, okay, so once price came into this zone, what I first did initially was mark out the current structure of this 15-minute trend. So doing that, I identified this as the most recent higher low in the 15-minute uptrend that we were in, as you can see. So this is the level that I was waiting patiently for price to close below before looking at sells. And as you can see, at the beginning of this week, price eventually closed below that level. This did not count as a break of structure to me because we didn't get a closure below. But just here on Monday, New York session, we got a closure below this level, which then validated the break of structure for me. And this is when I began to look for some sells. So going back to the template, we need to see a break of structure, which we now have. We want to see an imbalanced level of supply with liquidity resting below it. So in this case, what stood out to me was that we had this area of liquidity. You can see price created these equal highs on Monday morning in Asia session, and we had also left this 15-minute level of supply there, and this was simply the level I was looking to enter from. Another thing that gave me confidence in this trade was that not only was this a 15-minute level of supply, but we also had this hourly level of supply, which swept liquidity to the left and ultimately led to this break of structure as well. So simply all we're going to do after we've identified these 3 things, so just again, break of structure, imbalanced level of supply, liquidity resting below it as inducement, we simply set a limit at the zone with stop loss above the high. and then we target the most recent low on the 15-minute time frame. And this will usually yield around a 1 to 3 or a 1 to 4, which is completely fine for prop firm challenges and is a very good return. So if we just play price here a little bit, you can see that price is just playing about our entry. Also note that when price came back up to this entry point here, I don't make the trades break even. I simply wait for them to play out. So at this point, I would just be waiting to see if price will either hit stop loss or continue down. But ideally as well, to remove as much emotion as possible, I would just set an alert at the stop loss and at the take profit, and then not watch the charts for the duration of the trade. That way you don't get tempted to, say, exit the position here at break even against your plan. And you also don't, just get scared and exit the trade in a loss. So we just set alerts at the stop loss and at the take profit. And as you guys would have seen, if we had made this trade break even, we would have been tagged out at break even, and then price would have came down and hit the take profit. So the philosophy behind this is that your stop loss is there for a reason. Price has not hit the stop loss yet, therefore the trade is still valid, so why make it break even? You could have, of course, also targeted all the way down here. However, for these prop firm challenges, the aim is to reduce as much of the psychological stresses as possible, and we can do that by simply going into profit. So now that we know we're 3% in profit on the challenge, therefore we can lose three of the next trades, and that only brings us down to break even, so there's nothing to really worry about. But that is really it for the technical aspect of the strategy. For targets, like I mentioned, next low or high if more than or equal to a 1 to 3. Money management, 1% per trade always. So for this trade, we would have been risking 1% of the account to make 3%. If I lose one trade in the day, I will simply stop looking at the charts. I'm not looking to re-enter. Even if, say, it wicks you out and then it goes in your favor, I'm simply done for the day, as I find that if you enter more than twice per day, then you are no longer in a good state of mind to be taking rational trades that follow your plan, and they're probably not the highest quality setups either if you're finding 2 every single day. Only make break even when there's some high impact news. For example, if we have NFP and my trade is already running in profit, I will make it break even to avoid slippage. Or depending on the prop firm as well, you have to check this beforehand. If the prop firm does not allow news trading, I would close 10 minutes or so before the news event comes out, so that you don't get your account breached. And like I said before, has to be a minimum of a 1 to 3 risk to reward, otherwise I don't take the trade. This is simply a matter of probabilities. If you have, say, a 30% win rate and you are trading with a 1 to 2 risk to reward ratio, you're not going to be profitable. So if you have a 30% win rate but you use a 1 to 3, you will be profitable. You can just simply do the maths on your backtesting results. And then I have, for you guys to read on your own, a few more nuanced details, such as how I journal the trades, how I do weekly and monthly reviews, and an optimal routine for the best trading performance. And I like to also put a little mantra at the end of what to remind myself of every time I enter a trade. For myself, this is that the outcome of any individual trade doesn't matter. We have to think over a sample of trades, as we only have over a sample of trades. The weak law of large numbers, it will state that the long-term average of our results will basically converge to give us an edge over the market in simple terms. But that will obviously depend based on your own strategy and your own life. So that is it for the technical aspect of the strategy. If we go back to the PowerPoint now, and the next thing that I want to talk about is risk management on challenges and the live accounts. So as with my personal account, on the challenges I will do 1% risk on both the challenge and verification, that is, and I will never increase or decrease this risk depending on how I feel about the trade. For example, if I think, oh, this is a high probability setup, all of my confluences are there, I'm not going to then risk 2% on that trade just because I feel extra confident in the trade, because how you feel about a trade is a subjective measure, and it doesn't mean that the trade is actually a better trade. So yeah, just remember that. Keep the risk static at 1%, always on challenges and verification. Maximum 2 trades per week on prop firm challenges. Focus on high quality A+ setups only. If they are truly A+ setups, then you shouldn't find more than 2 per week anyway, in my opinion. There may be the odd occasion where you find 3 per week, but it should definitely not be multiple trades per day. Particularly with the strategy that I just mentioned in the last slide as well. And for me, if you have a stop loss hit on one day, stop looking at the charts completely. Don't even look for any more trades for that particular day. And this way, since you're only risking 1% per trade, it should be impossible for you to breach the daily drawdown limit. I really don't understand why people fail challenges by breaking the daily drawdown limit, because simply, if you're risking 1% per trade, say, and you lose 4 trades in a row, stop trading for the day and then you won't breach the 5% drawdown limit. It's that simple. And this is made a lot easier by the fact that you're only risking 1%, or you have a set risk per trade. When we're on the live account, if we make it to that point, we are simply going to be cutting the risk to 0.5%. This is based on my overall statistics, because statistically, my maximum losing streak is 12 trades. So if we are risking 0.5% on the live account, we have to lose 20 trades in a row to lose the account, which is very, very unlikely. It could obviously still happen if we go on tilt and start entering really bad trades against our plan. However, if we are disciplined and following our plan, you should never really be losing 20 trades in a row, else you probably don't have an edge and you should go back to back testing the strategy. But yeah, that's it for risk management on the challenges in the live account. And as for choosing the correct prop firm, I see a lot of people get this wrong because they think that the best thing to do is to go hunting for some very new prop firms in the industry, which are offering the lowest profit targets and the cheapest price. Nowadays, because you have prop firms coming up all over the place, at least 1 per day, it's simply a race to the bottom. Everyone's trying to undercut each other. Everybody's trying to get a lower price. Everybody's trying to use a lower profit target. However, my advice on this would just be, don't try and find a shortcut. There are no such things as shortcuts in trading. You have to go through the motions yourself. So the best thing to do is stick to the top prop firms in the industry, which have a track record of paying people out and being reliable. And for yourself, I would do this. I would create a table and compare all of the prop firms based on their price, max drawdown, profit targets, and profit split. Those are the 4 main things that really matter. You don't really need to go into any more detail. Comparing the prop firms, these are the 4 main things that you should focus on, in my opinion. And this will also depend on your selection of what you qualify as the top prop firms in the industry. However, I have done this for you a little bit. So if we go over to this page here, this is exactly how I'd go about comparing the prop firms. So along the top, we've got the prop firm name. Along the left-hand column, we've got the different metrics by which we're comparing the prop firms. So for example, MyFundedFX, very good prop firm. I got a payout from them before. I know they are a reliable prop firm. They've been around for some time, and they offer 0 time limit trap challenges as well. Phase 1 target is 8%, phase 2 is 5%. Max drawdown is 10%, and the price for a 100k account is £452, and you can get an 80% profit split straight away without the scaling plan. I believe with the scaling plan, it goes up to 90%. And then I would simply do this for the other top prop firms in the industry. I will also leave this document in the link in the description below so you guys can check this out for yourself. Obviously, just add another column if you want to add another prop firm that you're thinking of going for, just to see how it compares to all of these other ones. So now that you've selected your prop firm, say we're going with MyFundedFX for the sake of argument, we are ready to actually go ahead and take the challenge using all of the things that we have just accumulated and all of the knowledge that we now have. So from strategy to risk management to the prop firm that best suits us, we have basically optimized our chances of passing one of these challenges and having a scalable business plan as well. Which brings us to the next step, which is to actually scale the business and get multiple funded accounts with multiple different firms, which is the ultimate goal. And how do we go about doing this, and when is the best time to scale? Obviously, you don't want to scale straight after you pass your first challenge. You want to wait a little bit, and that's what I'm going to be talking about in this slide. So first things first, if we do pass the first account, we don't want to have any risk left on the table. So we want to place a 0.01 lot trade. So minimal risk, 10 cents per pip or whatever it is. And then simply wait for a refund. If you're doing a 100k account, get the £500 back. And then you have literally zero downside risk, meaning you can't lose anything. You're essentially risking fake money, which isn't even yours, in order to make thousands of pounds in real money. It's pretty mind-blowing if you try and explain that to anybody else. The only risk you have, I suppose, is the opportunity cost of capital, meaning that you lose the opportunity of potentially making thousands from the prop firm account. And obviously the time that you've invested into doing the challenges and verification. But regardless of that, I would say even if you do secure the refund, you've lost zero money, but then you end up losing the account, you've still gained a lot of valuable experience in trading. So this isn't a complete waste of time anyway. And obviously then if you've passed it once, you can go and pass it again, maybe tweak a little things and analyze why you lost the account if you do end up losing it. Payout rule. So one thing I see a lot of people struggle with is that they cannot get paid out consistently, even if they do pass the prop firm challenges. And I think this is due to having a lack of clarity on how much profit they should aim for. You see a lot of people, they'll treat prop firms like the lottery, and if they pass the challenge, they'll risk 5% on a single trade and hope to hit, say, a 1 to 10, make 50k, and then that's it, they're sorted for life. However, the best approach is to simply compound your wins over time, make lots of small gains on the account, secure the profit, and then go again. So the payout rule that I have is after a trade hits take profit, and if the account isn't then in profit, just wait for the profit split. So for example, if we have the first trade we take on the account loses, we're now at minus 1%. And then the next trade is a take profit for 3%. We're up 2% net profit. And then we simply wait for the refund. Similar thing, let's say we lose the first 3 trades, and then the next trade hits take profit for 4%. We then are up 1%, so we simply wait for the the profit split and secure that profit. So basically, as a rule of thumb, whenever the account goes into profit after your trade hits take profit, secure that profit and then just walk away, wait for the payout. Okay, so when should we actually scale and buy a second challenge? So for me, I would only want to buy a second challenge when the profit from the first account covers at least 2 challenges. For example, let's say you're buying a 100k account that costs around $500. In order to buy a second 100k account, I would want to have made at least $1,000 profit from the original account because then we can, treating this as a risk reward system, we can lose two of the next prop firm challenges, and we'd simply just be back to break even. This basically means that we only have to pass 1 in 3 challenges, and we will have a profitable business. And when you have multiple accounts, if you make it to this last stage, which is the ultimate goal, how will you actually go about managing them? So there's 2 options that I see. The first is to link them all in a trade copier, and the second is just to trade the accounts individually. With the trade copier, you can go online and find many different trade copiers. One of the best is called Social Trader Tools. I'm not sponsored, this is just the one that I would personally use. And what it allows you to do is basically place, say you have 4 different accounts, you place a trade on one account called the master account, and then it will copy that same trade over to all of the other accounts, so you don't have to enter manually on each individual account, which gets very annoying if you have, even 3 accounts, but especially if you have 4, 5, 6 accounts or more. And the alternative is to trade each account individually. And how I'd go about doing this is, let's say we have 400k accounts. I would trade the first account, wait for it to go into profit, secure the payout, then go over to the second account, trade that. If it gets into profit, leave it, go on to the third account, trade it until it's in profit, and so on and so forth. And that is simply how I would look to scale the prop firm business model that I have discussed in this PowerPoint. So that basically concludes everything I wanted to say on how you should go about getting funded in 2024. Just to end the video then, I also want to say that you should only be doing this after this stage is done to the best of your ability. So you have a fully back-tested strategy that you've also tested in the live markets, and you've also got a proven track record of consistent profitability. If you don't have this, then there's literally 0 point in taking a prop firm challenge, because you will probably just blow it. And also remember that most of these prop firm challenges nowadays are 0 time limit. So even if you do average 1% per month, you could take a whole year to pass the challenge, but you will still eventually pass it, statistically speaking. So there's literally 0 need to rush. This is a marathon, not a sprint. And if you guys have any more questions on how I would go about getting funded, leave them in the comment section below and I'll get back to you. But thank you guys for watching. Remember, there's a free trading plan in the description as well. Make sure to like and subscribe for more content like this, and I will see you in the next video.